Hey there, welcome back to my channel, it's me the Mind Injector. Today, we're diving deep into a stock that's been on everyone's radar, Palantir Technologies. The question on everyone's mind right now is simple. Has Palantir reached its peak? Could this stock, which has already seen a huge jump, keep climbing and potentially reach $70 soon? Stay tuned because we're about to dive deep into this AI-driven powerhouse. Palantir has seen a tremendous surge, rising over 2 times since the start of the year. It went from around $16 per share back in January to a high of $34 today. And while that 14% single-day jump after its inclusion in the S&P 500 got people talking, the real story is the long-term growth this company has shown. In just 20 months, Palantir's stock has increased almost 5-fold. But with the stock sitting near its all-time high, the big question is Palantir just getting started, or have we already seen the best it has to offer? Let's break this down. Palantir is currently trading at a valuation of around 31 times trailing revenue. That might sound like a big number, but when you factor in the company's potential to grow its revenues by more than 20% annually over the next few years, it starts to make a lot more sense. Over the past 5 years, Palantir has averaged 31% revenue growth per year, a figure not many companies can boast. Add to that the fact that Palantir has been profitable for 7 consecutive quarters, and you start to see why investors are so excited. So, what's next? Well, Palantir has recently signed several long-term service contracts with major clients, setting the stage for even more impressive growth. Some analysts believe this could propel the stock to as high as $70 per share in the next few years. And honestly, when you start crunching the numbers, it doesn't sound too far-fetched. Here's the key: revenue growth and margin expansion. Palantir is scaling fast, and with that, its margins are improving significantly. In fact, its net income has grown 3 to 4 times year over year in recent quarters. That's the kind of earnings growth that gets investors excited. Let's do some simple math here. If Palantir's revenue grows by 1.6 times from fiscal year 2024 to fiscal year 2026, and its margins improve by around 4 times during that same period, its earnings could expand by as much as 6.4 times. And that's where things get interesting. If earnings go up by that much, you'd expect the price-to-earnings ratio to shrink, right? Well, not necessarily. Investors are betting that Palantir's stock price will rise along with those earnings, keeping the multiple higher. In fact, instead of shrinking to a low multiple, it could stabilize at a price-to-earnings of around 50 times. If that happens, we're looking at a potential doubling of Palantir's stock price over the next couple of years. That means we could see Palantir hit $70 per share sooner than most people expect. Now, before we get too carried away, we need to remember that Palantir stock has been on this roller coaster before. Back in early 2021, Palantir hit a similar high around $34 before it experienced a bumpy ride in the years following. In 2021, the stock delivered an 18% return, followed by just 6% in 2022 and 17% in 2023. Compare that to the S&P 500's performance of 27%, minus 19%, and 24% during those same years, and you can see that Palantir hasn't always been a top performer. So, with the current uncertainty in the global economy, things like rate cuts and geopolitical tensions, could Palantir face another rocky road? It's possible, but this time around, the story is a bit different. One word: data. In a world where data is the new oil, Palantir is sitting on a gold mine. The company specializes in big data and analytics, powered by AI, and the demand for these services is only going to grow. Governments, corporations, and even small businesses are investing heavily in AI and data-driven solutions. Palantir is right at the forefront of this wave, and it's not showing signs of slowing down. Recent long-term contracts with big clients will provide steady revenue growth, and as Palantir's operations scale, its margins will continue to improve. More revenue, higher margins, and strong cash flow is the trifecta that investors love. In fact, if you look at Palantir's earnings reports from the last few quarters, you'll see a clear upward trend. This kind of consistent performance has analysts predicting that Palantir could double its earnings every year for the next 3 years. Of course, no stock goes up in a straight line, and Palantir will face challenges along the way. The uncertain macroeconomic environment could weigh on the stock in the short term. Things like inflation, interest rate hikes, and geopolitical events could create volatility, but the long-term outlook remains bright. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. The 2025 outlook for Palantir is divided among analysts with both bullish and bearish perspectives. Forrester Research sees Palantir's artificial intelligence platform as a strong player in the AI and machine learning space, outperforming major competitors like Microsoft. Bank of America is also optimistic, predicting a potential stock price of $50, noting that Palantir's inclusion in the S&P 500 could attract institutional investment and solidify its role as a key data platform for the US government. In contrast, Deutsche Bank's Brad Zelnick is pessimistic, rating the stock as a strong sell and forecasting a drop to $21, despite Palantir's strong recent performance. Also, Citi analyst Taylor Radke gives a neutral rating with a $30 target, citing uncertainties in government contracts and the early stages of monetizing artificial intelligence platform. Analysts are divided, with some cautioning that Palantir's valuation is already high. But when you look at the company's consistent revenue growth, improving margins, and strong positioning in a fast-growing industry, it's hard to ignore the potential upside. Here's the bottom line. If Palantir continues to execute on its growth strategy, focusing on expanding its data services and improving margins, it has a real shot at hitting $70 per share in the next couple of years. Investors who believe in the long-term potential of AI and data analytics will want to keep a close eye on this stock. The road to $70 won't be without bumps, but for those who are patient and willing to ride out the volatility, Palantir could deliver some serious returns in the coming years. So, what do you think? Is Palantir a stock you're keeping your eye on? Do you think it has the potential to hit $70, or are you cautious about its high valuation? Let me know your thoughts and let's discuss where this AI giant is headed. This is it for this video, guys. Thanks for watching and please make sure to subscribe, like and leave a comment down below.